The following is a paid program, and the views expressed on this show do not represent the views of WJZ-FM, Entercom Communications, its sponsors, or affiliates.
The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Welcome to Winning in Retirement. I'm your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Here with me today is Alex Monk, and Alex Monk is a certified financial planner practitioner and financial advisor at Akers Financial Group also. And today we are beginning our show, our first quarter, in a certain way. Today we want you to know that our show is called Winning in Retirement because we want you to win in retirement. To win in retirement takes a lifetime of financial decisions that matter. Our show is called You Don't Know What You Don't Know. And so when it comes to finances and comes to financial planning and investing and stock markets and things like that, you need to be careful on what you know versus what you don't know. There's a lot of topics that we got to cover today, so hold on tight. It's a show you need to pay attention to, you need to listen to, so that when everything's said and done, you are going to win in your retirement. Good morning, Mr. Monk. How are you doing today?
Hey, Brian. I'm great. How are you?
I'm doing all right, doing okay. So
I know this sounds kind of like a gimmick, but me and my wife talked about this last night. Like, there's so much stuff that we don't know. It's incredible.
Yeah, when it comes to finances, when it comes to really anything that's out there, when it comes to our financial life, technology, medicine, all kinds of stuff going on, you got to make sure that you are doing the very best for you and bringing in experts in areas that you just don't know. So one of the things that happened is this week in the stock market has been on the borderline of absolutely crazy. So what I want to do is start out the show and talk about the stock market this last week and what your thoughts are, and then really about what actually happened. And we're going to try to explain the best we can and as simple as we can without getting too deep into the technical side of the stock market itself.
So like weeks like these, Brian, are like what I dream about. These are unprecedented things in the market, and it's so fascinating to see it happen. So kind of in a nutshell, what happened is individual investors on chat forums, etc., combined with, other things, have been essentially pumping up stocks that are no longer really valuable, or pumping them up way beyond their metrics. And when somebody's selling a stock short, meaning they're betting that it's going to go down, they're not so happy when these groups are doing this. So it was kind of like the reverse of what hedge funds usually do, in that they get on the board and try to do all these things to take over a company. But now you have the retail investors doing it. You got a lot of chat boards. You got a lot of, I've even heard about radio people talking about stock trades this week. So everybody's been talking about the big one, right? GameStop.
Yeah, so let's just begin with the basics. The basics is there's a store called GameStop, and GameStop has been a stock that has been floundering for a long time because of the industry has passed it by when it comes to delivering games, but it still has stores, still trying to keep going. But the hedge fund managers are extremely wealthy people, and the reason is that they make their money when they make profits for their investors. And they also have most of their money in the same fund, typically. So if you think about up in Boston, the owner of the Boston Red Sox, I think it's John Paul Tudor Jones. I think that's his full name. They're a hedge fund manager. There's a bunch of hedge fund managers involved in sports. But these hedge fund managers, typically, they don't charge a fee if they lose. They only make an extraordinarily high fee on the profit. So what you find in hedge funds that are typically private management, and some of them have barriers to entry at like $5 million or $10 million for the minimum investment to even get into a fund like this, what you'll see them do is they'll make 20% of all profit. So in the design of hedge funds, it's designed to take risk and extraordinary risk. And so the hedge funds are set up to basically any way possible to make profit. And so over the years, hedge funds, when they see a stock that they think will only go down, they'll place major bets. And so what some very smart people did is they looked at the shorts, and then they decided to do the counter of it. So the real basicness of this is if someone owns a stock, they make money when it goes up. When you short a stock, you're basically selling it at that price of that day, and you're selling it basically almost like a loan, in that you're selling it, and you make money if it goes down. And so if the stock's at 20, you can make $20 a share as your profit if you short it. If the stock goes up, your risk is basically considered infinity, in that the stock can go as high as possible, and that's your risk to the upside. Now, some of the rules for short selling, do you want to cover a little bit of them? It's hard to keep it simple. What do you think, Alex?
It really is. So there's something called margin involved in all this, which is basically a home equity line of credit for your trading account, if you will. And when you have short trades, you have to have margin on the account, which means you have other assets to back it up. So when your trade goes the wrong way, not only are you losing money, but you have to make sure that everything else in your account is going up so that you keep your right level of margin balance. And then this one got really weird, and that market makers and the option markets were involved, and that's just the type of stuff that make your head explode, especially if you're driving.
Well, the short sale, because we can't go too far into the option side of it yet, but just on the short sale, so when you have the risk all of the upside, there's something called a short squeeze, and that is when that stock starts to go up. Then your calculation of your home equity credit, like your debt that you have there, they say, oh, you're short, you need money today, we're selling all these stocks. And so Wednesday this past week, you saw many top line stocks like Apple and other ones drop about $10, $12 a share because people had to sell those stocks, had to sell Tesla stocks, other stocks to cover. And that was sort of a basic way of trying to get enough cash. Those hedge funds that did a lot of shorting, which there's some people say that the short position was more than 100% of the stock, which I'm not sure how that's possible, but it was possible that day. So as the GameStop went up, the craziest thing is the easy way to get out of a short sale is to buy the stock. And so when you have a stock that's starting to sprint because of millions of investors buying little shares and piling in on the buy, it made the stock just rise incredibly fast, incredibly quick. Not because the company did something new or the company did something different or they're producing or changing their metrics. It's all because people are going after the short sellers, and that was really what drove this price up.
And this is kind of the first time we've seen that out of retail investors, and retail investors are your typical people driving down the road, listening to us, hopefully. And that is a scary place to be, because if you get involved with margin and the option market and things like that, I had questions this week about after-hour trading from people that don't typically trade. So it's like, when I get those kind of calls, it's like, what's happening? Something's broken.
Yeah, so now I've been thinking about it, and I'm thinking of it as almost like fantasy football to the stock market, almost like DraftKings to the stock market, and that people sort of take a little bit of information, they see the stock moving up, and they just get on board the train, believing that they too are going to make money. And the sad part in the stock market is there is a lot of people that try to manipulate information. They try to manipulate what's going on. So to be able to make money in this, you have to make a good buy and a good sell. So there's a bunch of things that happened this week on this stock and about 4 or 5 others. One of the key ingredients is this: if you're investing any way like this on the buy side, you need to be careful in the fact that that's money that you could lose, and you could lose all of it. If you are option trading it, you will probably lose all of it, because option trades very, very fast, and it's like you take your stock buy and you multiply it by 100. So you got to know what you're doing. That's the hardest thing about talking about this is we don't want you to think that we don't support the retail investors. I believe the retail investors have every right to do this, to buy and get together and buy. I worry that somebody got in first, which just happens a lot. It happens on financial TV. They come on and talk about a stock after they bought a bunch of it, and then the stock rises up, and then they sell. Then they come back on a few days later and say, yeah, I'm lowering my number on that stock. But they're in and out making profit off of selling information. The stock market's supposed to work on fair information where people are not being manipulating it. So if there's such a thing as a pump and dump, that's where people advertise, market, and try to make the stock sound incredible, and then they buy it before they advertise it. And then when the stock rises up, they start dumping it, and then the ones that buy in later are the ones left holding the bag, and they lose very quickly.
And these the hedge fund, Brian, like they kind of operate under a different set of rules, and no one really talks about that. And I'm glad that they are, because everybody should have the same rights and the same access to information. Like it shouldn't be just because you have buckets of money you can get information faster than somebody else. That doesn't sit right with me.
Absolutely. So what we're trying to do right now is this. The first thing is this. We're talking about this week in the stock market. We have a topic called You Don't Know What You Don't Know. And one of the things is this, is that when a stock's rising, we do want to ask why. What is making it go up? Is there a good, solid, fundamental reason? Or is it just the momentum has swung that way? Or is there a movement against the stock? Now, if you're in a stock that's rising very quickly, you got to look at it, and you might want to take a lot of different trading concepts to bear. And that's what we're going to try to talk about in the second and third quarter of this show, is what should you do if you made some money on the stocks that have risen very, very quickly. And what we want you to do is this. We want your finances to be great. We want you to have almost like two pieces in your mind. One is it's okay to have a play account that you can afford to lose all the money in if you really want to play that way. But the other account, your financial security, needs to be set up and built and built and built over a long-term approach of wealth where you want to accumulate money over time. We want retirement to be a place where you can relax, you get your time back, you're drawing checks, you know they're coming. Things feel great when it comes to how you manage your money. Now, at Akers Financial Group, we invite you to give us a call to talk about your situation, talk about exactly where you are and how we can help you balance the trading, balance the financial security that you and your family needs in your future that needs to begin at the age you are right now. No matter what age you are, it must start now. So give us a call at 833-WIN-RETIRE. That's 833-WINRETIRE. When you call, leave us a voice message, and Susan will call you back on Monday to schedule a phone meeting, virtual Zoom meeting, or an in-person meeting, which is mass to mass. Not doing a bunch of them until spring, but you can meet with one of our team of advisors to go over your exact financial fingerprint. Start planning now for your retirement. Call us at 833-946-7384 or visit AkersFinancialGroup.com. Wealth begins with a proper attitude about money. We'll talk about that in the second quarter of the show coming up next.
The choice of your child's school is vitally important. Wouldn't you go a few more miles for something really special? I'm Brian Wilson, principal of Harford Christian School. Harford Christian is an independent school in northern Harford County, serving students in preschool through 12th grade. Our Uncommon Core makes all the difference. For nearly 50 years, we've partnered with parents in the important responsibility of training children in God's truth. Our biblical worldview stands in stark contrast against today's culture. At HCS, political correctness is never prioritized above God's unchanging truth. We hold the bar high as we prepare students to serve God's kingdom, not just the workplace of man. Affordable tuition and transportation options put the choice of Christian education within your reach.
Come visit the longest established Christian school in Harford County. You can become acquainted with us through a private tour or on the web at harfordchristian.org.
You are unique. Just as no two fingerprints are alike, each individual's financial situation is uniquely their own. That's why the Akers Financial Group's team of advisors begins each relationship with a proven process that identifies your financial fingerprint. We'll guide you through a series of steps designed to provide a complete and accurate snapshot of where you are right now. Everything we learn about your financial fingerprint will become part of a detailed financial plan created especially for you. We'll never give you a cookie-cutter proposal or suggest a one-size-fits-all portfolio. The financial plan takes you from where you are now to where you need to be. Begin by discovering your financial fingerprint right now by going to getmyfinancialfingerprint.com. That's getmyfinancialfingerprint.com.
Member FINRA SIPC. You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. Yes, this is the second quarter of Winning in Retirement. I'm your host, Brian Akers, and here with me today is Alex Monk. Alex Monk has been buzzing through the first quarter. Our show today is this: you don't know what you don't know. This applies greatly when it comes to the stock market this last week. In the first quarter, we're just talking about the basics of what happened with GameStop, hedge funds, retail investors, and things like that. This quarter, our topic starts like this. It goes, a real simple question I have, and that is, wealth begins with a proper attitude about money. So as we talk about what's going on this week, we're going to talk about wealth and how it begins with a proper attitude about money. All right, Alex Monk, what's some thoughts you have when it comes to wealth and a proper attitude about money?
So it's kind of like there's like two people in my brain, Brian. One of them is Gordon Gekko from Wall Street, and it says greed is good. And then there's the other one that's, wants to be generous, wants to give everything away. So it's kind of weird. When I first started in this business, I used to see these numbers on a piece of paper, and some of them were big, some of them were small, and I kind of had sticker shock. And now it's just a number. So it's like the more you're around it, just as a tool, you see that money isn't really this thing that is worth being greedy over or, hurting relationships over. It's just a tool. And the people that I think win the best in retirement, if there's such a thing, are the ones that don't necessarily put all their value on the money, but they respect it. They know what it takes to earn a dollar, what it takes to save a dollar, and they're not looking to get rich quick. That's a big one.
Right. If your concept is getting rich quick, typically it's not going to work for you. Wealth is the accumulation of assets and money and value over time, and it does work. Good, sound financial planning, good, sound financial advice is all geared off of the long-term approach to things where you do the right things many, many times. Now, what happens when it comes to finances is many people want to get there quickly, but they don't want to do the work it takes to keep it and to grow that wealth over time. That's why when you see stories about lottery winners or people that made a lot of money quickly, you find out that they're bankrupt within a year or two after that. It could be NFL players that retire, and about a year or two out, 70% of them are bankrupt, even though they made millions prior to that. So what happens is this, is an attitude about money where you understand that it is a tool. It's something where if you use the following concept, you're going to be okay. So if we had a bucket of money, and instead of, let's call it a cow, because I love the cow approach. If you have a cow and you're going to milk the cow and take that money over a lifetime, that's a much wiser decision than to eat the cow or to kill the cow or to waste the cow in a high-risk type gamble. Now, in financial planning, we believe you need to have a herd of cows. That herd, maybe you could take one cow and go make it a steer, and save it for a year and see if it lives or dies, that kind of thing. I'm going too far on my farm analogy. I need to stop.
Yeah, we're not advertising for Chick-fil-A, although I would love to have some minis right now. But yeah, you're right. You got to milk the cow, because if you go outside and you shoot your cow, guess what? You got to go to your neighbors for milk. Mm-hmm. You want your money to work for you, and in the environment we're in right now, you can't get that by sitting in the bank. There's nothing there. So we have to be able to make our plan adapt to whatever the world gives us and whatever life gives us. So it's not like, welcome to Akers Financial, here's your book pre-printed for you. It's, who are you? What makes you tick? How do you want your money to help you and your family and build the life you want? Because that's really what it's all about.
Yeah, it starts with that financial fingerprint where we talk about where you are. Now, financial planning sounds boring, doesn't sound exciting. But the thing, let's call it financial coaching, let's call it just getting things right. If we're able to do things right, we're going to be in far better shape. Let's use an example of this last week. Let's say you bought a stock and that stock went up 100%, 300%, and you made $1,000 turn into 10,000, 10 into 100. What are you going to do with that winnings? Our answer is take some winnings off the table. Many times it's good to take your original money, pull that back out to play again another day. So that if you do lose, which the likelihood of losing in the stock market is high, especially when you look at what's happened Thursday and even Friday, and where the apps that you can actually trade from are restricting the ability to sell or to buy a stock or the ability to trade at all or even to get into an app to trade. That is something that's going to cost some companies that company being around. There's going to be a lot of regulation coming out to try to stop large companies from preventing retail investors from doing their own trades on their own account. It's borderline fraud, in my opinion, if you can't sell your stock. It's very tough. So what do you think of that, Mr. Monk?
Yeah, so that's kind of a tough one for me because I agree with you on the theory, but these apps were not built for the type of traffic that they're getting. And the functioning of the market, like the market makers can't buy enough of this stock to facilitate all the trades because every trade, right, is two-sided. Mm-hmm. Somebody's got to be selling, somebody's got to be buying. And when you have that type of feeding frenzy, like how do you make sure, it's like the movies back in the day where you just see pandemonium, a bunch of guys in the circle yelling, throwing tickets at each other, except everybody's sitting at their house on their phone, just hitting refresh or sell or buy, I guess is what it looks like. I mean, and we're constrained by technology and different things, so I definitely think you're going to see regulation, but I don't know what the right answer is.
Yeah, we'll see in time. We're not going to try to do this show on the regulation that should come out of this. I think transparency of the hedge fund managers have to be there. The idea of shorting, there has to be a way to allow it, but a way to make sure things are fair in the long run when it comes to all investors rather than just certain people. So when it comes down to this part of the show is wealth begins with a proper attitude about money. If you have and separate your money in a couple of different ways. Let's say you have your financial security money, your financial future money, you're sending money to your future self. We consider that money to be well balanced, diversified. Should be things that you're investing in that is going to grow at a reasonable rate. You're trying not to quadruple it in a week. The other side of it is if you have a trading account that is like a business, one that you know that you can put money in and lose it all. If that's truly like a business and you understand the risk that you have with it, we think that's not a bad thing to do if you know what you're doing. Because you don't know what you don't know. Some people, to create a trading account, are going into debt to create a trading account. We believe that will lead to financial ruin because you're taking an extraordinary amount of risk to begin an account, and then the second thing you're doing is it's debt, which has interest, and then you're trading whatever stock you're trading, and that stock is not going to definitely go up at all times. It's going to go down so fast that you might not have a chance to get out and hold any of your money. The weird thing is that stocks can make big movements on demand, and one of the things Alex was saying that if you go to buy a stock and there's no one selling, the price keeps rising till they find a seller. And so that's what happens on the stock market. So that's one of the reasons stocks can go up so fast in a day. So when there's nobody's selling, stock keeps rising till they find one, like an auction.
But it's a lot of fun. I mean, you get a rush watching it. And I think that after all of this, if it brings 10% more people to the table to sit down and say, hey, what is the stock market? Am I missing out, not saving for my future? Like, no matter how you get to the pond, as long as you drink the water, right? So,
I don't believe in that as a general term. I'm not a broad, always lead to the right thing. I think there is some real sound financial things you need to do. And some of those sound financial things are the toughest of things. You need to save money. You need to pay off your debt. You need to stop buying stuff you can't afford. You need to change your financial life. Many times this starts with changing your job to where you make more money. Yes, they might be raising minimum wage, but if your goal is minimum wage on your financial life, you're probably not going to accumulate wealth over time. You need to basically think about what are you doing to create money, to create wealth over time. And it's really, truly your vocation. What are you doing as for a living? How are you going to make your money? We think people should get out there and look at trades and look at jobs that are needed and are greatly needed so that you can make your money that way and then save out of what you're bringing in. That savings becomes the source of these investment funds that you can grow and save for the long term. We believe that people need stocks into and throughout retirement. We do not believe that people in retirement need to sell all their stocks. You need stocks to beat inflation. So wealth begins with a proper attitude about money, and that is you need to become a saver. You need to become a creator of money through hard work.
Yeah, and the more income streams you have, the more cows, Brian, the better.
Absolutely. And those cows can have many names. They could be your 401k, a Roth IRA. They could be your bank account. The cow could be your job, could be a second job. It could be some type of business that you begin that creates and makes wealth. And of course, it can be your stock account where you can invest and make money. It's been since the pandemic lows of last year, stock market has had some really good ability to come back, and that's made some people a lot of money. As you make a lot of money in the market, you need to separate that out. At Akers Financial Group, what we try to do is this. We are a local independent. We don't report to a big company on Wall Street. We don't report to a big hedge fund in any way. What we try to do in our offices in Farmington and Lutherville and with our clients all around the country is we talk about their retirement, about them, and about what's best for their situation to make them win in retirement throughout all the years. Give us a call at Akers Financial Group to schedule your free meeting. Call us at 833-WIN-RETIRE, 833-WINRETIRE. When you call, leave a voice message, and Susan will call you back on Monday to schedule a phone call, a virtual Zoom meeting, where we'll get together with one of our team of advisors and talk about you and what's going on in your life and how to make sure you are going to be successful in and through your retirement years. Give us a call at 833-946-7384 or visit AkersFinancialGroup.com. When you don't want to take money off the table, it might be the exact time to do it. We'll talk about that right after we begin the second half.
Are there times in some games you wish you could just turn on the TV at the 2-minute warning? Because that's the most important part of the game, right? As a fan, these are the most exciting moments. Your team could take home the victory or crumble under pressure. But when it comes to your retirement, don't wait until the last 2 minutes. So much can happen in the final working years before retirement. Whether you're in your 50s or 60s, near or already in retirement, there's still time to put a plan in place. Don't wait until right before you retire to begin planning for your future. Can you win the retirement game like that? Come in and talk with the team at Akers Financial Group. They've been helping families in Maryland plan for retirement for over 30 years. Call to schedule your complimentary meeting at 833-WIN-RETIRE. The number again is 833-WIN-RETIRE. Start planning for your retirement now. Call 833-946-7384. Member FINRA SIPC. Imagine you're retired. You wake up in the morning and you don't even know what day it is. Every day seems like a Saturday. You can sleep in, cook a nice full breakfast without thinking about morning traffic or work deadlines. The Saturday calmness you used to crave is now your everyday feeling. You're not worried about your retirement income or how your investments are doing. Your biggest decision that day is where you're going to drink that first cup of coffee. Is that the kind of retirement you want? If it is, then sit down and talk with the team at Akers Financial Group. They want to help you get there. They've been helping families in Maryland plan for retirement for over 30 years. Call to schedule your complimentary meeting at 833-WIN-RETIRE. The number again is 833-WIN-RETIRE. Start planning for your retirement now. Call 833-946-7384. Member FINRA SIPC.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers. Here with me today is Alex Monk. We're both certified financial planner practitioners. Alex Monk has been working with Akers Financial Group over 9 years, and he has become one of our experts in many, many topics, from taxes to investments. He helps run our portfolios that we have and does the investment trading for Akers Financial Group for our different portfolios. So Alex Monk, there's been a lot going on in the stock market. As we begin the second half, what's fun is to come out of the locker room ready, be a little excited to begin the second half. We really got to have a good comeback here in the second half to bring it home. Are you ready, Mr. Monk?
So another thing you left off my resume was I'm the only advisor with a mustache. So that's another thing, which doesn't translate over radio. But yeah, my orange slices are hitting. The sugar's getting to me. I'm ready to go.
All right, so you're an orange slice halftime kid, aren't you?
I was the kind of soccer player that only played defense or goalie. I was what you would call a husky child. I did not want to run a lot. My parents used to say I'm the only person that can run a home run into a double on a baseball field.
That's funny. I'd love to spend the show talking about that, but I think no one would want to listen to me making fun of you. So a couple people may enjoy it. So what happens is this. Winning in retirement takes time, takes work. Sometimes you do have to hustle. Sometimes you do have to run. Sometimes you have to walk. But sometimes you got to stop. And that stop is where you sit down and figure out where you are right now and then have a plan to your future. Now, to begin the second half, this third quarter, what we want to do is talk about this little topic called when you don't want to take money off the table, it might be the time to take money off the table. What does that comment mean?
So it's like when the getting's good, you got to get it, but at the same time, that's a greed factor, right? You see other people making money. You're starting to get really excited. You've had a couple big wins. And then it's like, oh, I can't lose. It's that feeling you get like 2006 when you're taking out that third home equity. It's like, my house will never go down in value. That's probably when you want to say, hey, maybe I should put some of this to the side. Or, as we call it, check your asset allocation. Have you had a run-up? Have you made money? Do you want to protect that money? Where can that money make, where is it going to have the most utility? Because typically the thing that went up most last year will not be the thing that goes up most the following year. It just doesn't work like that.
What we've seen in my career when it comes to successful clients, what we'll tell you is this, is typically they take some risk. They take risk. They will own companies and stocks that become incredible companies and stocks. And they diversify and buy investments that have risk, where they can achieve that 10, 12% type of stock return. Stock market returns of 10 to 12% is more the norm than 100% in a week, or 1,000% in a week, or anything crazy like that. The idea here is if we want to grow wealth, we need to invest our money and buy high-quality investments over time. Yes, there might be some opportunities, business-wise, arbitrage, where you can make money on that, and that's a business, in my opinion. And you got to treat it like a business where you become a true expert so you can make money and not have people make money off of you.
Yeah, so like this, buying a stock is buying the future earnings of that company, right? So you're buying and you're willing to wait. So part of that, function, the mathematical equation there is I'm going to give time, and deal with some price volatility or risk, but in the long term, the company that I'm buying should have increasing earnings or, they have strong outlooks. So that would be an investment. A trade is something just completely speculative. When something's going up 100 or more % in a week, you might as well be at a roulette table trying to pick the number, because your odds are just about the same. It's hard to see when you see it on TV and the news cycles 24 hours, and you have people in social media and things promoting different types of assets or trading accounts, and that's all speculation. I mean, that's just like the California gold rush back in the day. I don't know how many people found gold, but I know a lot of people died.
Yeah, was that the 49ers, right? 1849. The gold rush was one of the key things. Many people spent everything they had to head out west. It's one of those, I love Western stories. I love looking at the history of that. But the concept of chasing after that gold, the first people there are the ones that make most of the money. And that happens in a lot of things. It could be things called multi-level marketing. It could be things in pyramid schemes. It could be in pump and dump. It could be in stocks that you talk about at a cocktail party. The first people in make the money. If you're the last one in, typically you're the one that's giving the money to the one that made the money.
Yeah, so if your super weird uncle or your neighbor is tipping you off on this stock, most likely you're last to the party. I was never good at musical chairs, Brian, because I told you earlier I was kind of slow, but that's kind of the same deal. If you get stuck and the music stops and you don't have a chair or someone to buy what you've held, you're done. And picking the top and the bottom is not an easy thing to do. It's basically impossible. To get it right on both the bottom and the top is a very, very unlikely thing.
But when you're looking at a computer or your phone and you're looking at stocks and you're looking at graphs and you're seeing things just flying up, you just want to get on board and you want to put some money in. And then what we talk about is if that's in an account where you can afford to lose it all, then you're just basically like a business where you're taking risk. That risk is your risk that you're taking. And we have a lot of clients that do this. They have what we call a play account where they have that business and they're buying and selling and trading. Now, we also have clients that have businesses and real estate, businesses and corporations and all kinds of different businesses. So it depends on what people are an expert at and what they enjoy doing. We just want them to know what they're doing and to know why they're doing it, what the purpose behind it, and how they're going to make money, how they're going to get into a stock, and how they're going to get out of the stock so that they're not the one giving money away.
Right, and to do that with your whole portfolio just seems extremely reckless. So I think if that's the plan to make it to retirement, it's not going to be a successful one 9 out of 10 times or 99 out of 100, whatever you want to do for the odds there, because it doesn't happen overnight. Very, very rarely do people win the lottery. And the way that people are looking at the stock market right now is definitely in a speculative manner. It's a feeding frenzy. It's a news cycle. And you don't want to be that person. You want to have some base level foundational stuff. Like, I know where my next meal's coming from. I don't need to sell the stock this month because I don't have a mortgage maybe. There's a bunch of different answers. And like you said, Brian, we meet people with all types of different backgrounds, all types of different interests. And when you have an interest or a passion, it's good sometimes to invest in it. That can be one of the best things people do. They still come to us, though, because they don't do retirement planning. Trading and retirement planning are just two different things.
Exactly right. So what happens is this, is you got to look at your finances, and if you want to invest and save and do this, you need to have a budget where you have extra money to save and invest. And we think that's a great first step, is to find the money to be able to save and invest. No matter how small, there's a way to save and invest money. Now, as we grow wealth, And we've had multiple clients that have done extremely well in life. And what we try to do with them is when we meet them, we talk about, well, what's their risk level now? And sometimes we go over their portfolios. We say, well, you're over-concentrated in a stock or in your company plan, things like that. And we try to scale them down to 25% of their net worth being in any one stock. And so that is just a general, just fundamental financial planning concept where you try to diversify in a way where you can preserve what you work so hard for. Now, when we're talking about your financial future, some of the younger people might think, oh, that's never going to be here. That's a long ways away. I'm only 53 years old, and I can tell you that life flies by. And what you need to do is you got to think about, what is my 60-year-old self going to think of me in my 20s, 30s, and 40s? Did I waste those 20 years of my life and not save and not throw money to my future so that I could retire early, so I could reach every goal I ever wanted in life? Because we all have larger goals than just to go shopping this weekend or to spend money. We have larger goals of providing for our family and taking care if we got sick or if we passed away too early. There's so many large financial goals that require money unto itself. We need to put together a financial plan that ties into your investment plan. Make sure when you're investing that you have money set aside for your financial secure future, and then you can have a play account to enjoy and play and have a business and learn to trade and do things like that.
And that brings us back to we don't know what we don't know, and every year we get a little bit smarter, but the smartest thing that you can do is to recognize where you're weak and bring in help. And that's what we're set up to do. Like we're that financial coach.
Absolutely. At Akers Financial Group, what we think about is this. We think about people out there and we say, well, maybe you're in basically a defensive mode in life where you're reacting to all the negative news, all the negative things. And what happens is you end up just sitting there, almost like sitting on a sofa where you keep moving back and back and basically just being sucked in by the sofa. That reaction to what's going on takes away your energy. It creates defensive energy. Creating is now when you sit up, you sit forward, you have an energy that's of creating and taking advantage of opportunities that are out there. People need to help get through all the situation we've been through the last year by being in an attitude of creating and taking advantage of opportunities that you have. It's a choice, that attitude, that money attitude that needs to change so we can do better. We want you to step up, sit up, and make a phone call. That phone call is to Akers Financial Group to schedule a free meeting at 833-WIN-RETIRE. That's 833-WIN-RETIRE. Start planning for your retirement now. Call us at 833-946-7384 or visit AkersFinancialGroup.com. You need to pay it forward to yourself. We will talk about that in the fourth quarter. Akers Financial Group was founded on the principles of integrity, trust, and service. We believe each and every client is unique and deserves advice and implementations that apply directly towards their personal financial fingerprint. This financial fingerprint tells us the objective risk tolerance and purpose of the investment and insurance tools that we use to assist our clients in reaching their goals. By discovering the purpose of each financial decision, we can help you accomplish your goals. Intelligent financial design starts with a detailed balance sheet and cash flow to know where to start. This leads to a financial decision that will allow you to reach your goals with your risk tolerance in mind. Our relationships begin with an initial consultation and grows with each meeting. We would be thrilled to work with you and begin your planning process. Call us at 833-WIN-RETIRE. That's 833-946-7384. Or visit our website at AkersFinancial.com. Member FINRA SIPC.
Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement, Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678-356-1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide provide tax and legal services. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers, and here with me today is Alex Monk. I'm both certified financial planner practitioners and experienced in helping people with their personal financial situation and help them become financially successful for their retirement years. Today's show has been called You Don't Know What You Don't Know. And if you haven't been listening since 11 a.m., we've covered a lot of topics trying to explain the market and what's been going on certain stocks this last week and how that needs to change our attitude about money when it comes to making sure we're doing the right things for our long-term self. What you can actually do is go to akersfinancialgroup.com, and up top of that website, you'll see our radio tab, and on that radio tab, you can go back and listen to any radio show that we've had in the past. When you listen to those radio shows, you can hear our topics, hear our approach. You can hear what we try to recommend to our clients through the radio and in person on a day-to-day basis. So go to akersfinancialgroup.com and check out our past shows. You can also, on akersfinancialgroup.com, check out our webinars. We have many videos on there that we have done and produced in the office. This last week, we just did our market outlook for 2021 and our market review of 2020. That's through our website at akersfinancialgroup.com. The tab says webinar. All right, so this fourth quarter's winning time. You put your 4 quarters up. It's time to finish strong and finish well. And my topic for this quarter is this. We need to pay it forward to ourselves. What's your thoughts on that, Alex?
Well, as you said earlier in the show, Brian, I only have 10 years experience when you have 30-some years of experience? So I'm sure you've seen some incredible client stories. Sorry, it's never too early for an age joke.
Yeah, but it's a weird career. When you're young, you're too young to know. When you're too old, recently I've had people tell me, you're an experienced advisor, and the weird thing is that you focus only on retirees. You don't know how to work with younger people. And my answer is, I've been a younger person, and I survived financially, and I made plans. I did the goals. I financially been blessed because of doing the hard work during the younger years. Financial planning is not something where you make all the money tomorrow and then you're just set for life. It's a financial plan over time. The things I think about in my career are these traumatic times when things go a little crazy. I guess one of the things I'll think about is the late 90s, 97 to 99. They call it a bubble now, a tech bubble. But back then, you'd watch the news, you hear a stock name in the morning. You wouldn't even check out what the stock did. You didn't know if they'd been open for a week or 2 weeks. You bought the symbol, and you made money if you sold it fast enough during that day. And that was in 1999. And I would say that I enjoyed that time. Did I get an AOL and Yahoo and Amazon all at the beginning? Yes. Did I hold it long term? No, I did not. And the reason why is because we were trading very, very fast. Now, back then, we didn't have the apps. We didn't have the internet ability to trade quickly like we do now. It was old school stock market, phone calls and ticker symbols and trading. It was a different time. But the concept of that bubble was the fundamentals didn't matter when a stock went up. Now, if you go back in history and look at the NASDAQ, you see that the NASDAQ went flying up. Now, when it was over, and it was over quick. The stock market on the NASDAQ lost 85% from its high, and that was just into 2000. Now, in 2000, In January of 2000, our portfolio, we had a stock called Cisco Systems, not the food company, the tech company. And we sold it in our portfolios, and we got a lot of phone calls, like 100 phone calls on, what are you doing? And we were like, well, the stock is so overvalued, we want to move on to an industry that's undervalued, where we believe will rise and make money over time, because that was fundamental investing. Now, that bubble happened very quickly. It started in technology and then spread throughout the market. Then you had 2002 with the problems with basic fraud that occurred in companies like Enron and some of the cable companies out there. There were 17 companies that just was fraud against the market, causing the market to just go crazy down into the 6,000 range. And then the market started to rise back between 2002 and 2007. A lot of it driven by the mortgages being free, real estate going crazy, mortgages being, what I meant by free is so free you didn't have to do appraisals. It was just a crazy time on the real estate market. And then that burst in 2008, 2009, and that took a lot of banks down, took brokerage firms down, like Merrill Lynch, went bankrupt, disappeared. You had Lehman Brothers, a bunch of them went down because they backed mortgage securities, but they didn't have the money to truly back it. And so what happens is that when you go back and learn those situations, and you say, well, what could I have done to done a better job during that period? I always say is the allocation of your money on the way in helps you get through it. If you're over-concentrated in any way or over-concentrated in stocks, you're going to have more volatility than you should. As you get closer to retirement, we got to dial it back. We need to look at things like, what are we going to need in our future? If we can take winnings off the table, move it to our financial secure side, make that money be there for a lifetime, what we're doing is pulling that money over, getting ready to retire at an early age. And that would be a great way to handle your finances as you think about these bubbles and movements. We don't want to look back here and say, oh, that was a bubble. I should have gotten myself out. I should have taken some of that winnings off the table when I had it. Look at your finances, see what you can do now to make your financial life better.
And I have this talk with people all the time, Brian, and I'd say there's 3 things we know for sure. We're going to die. We're going to have to pay taxes. And at some point in the future, the stock market will go down. The problem is we don't know when that's going to be for a lot of those things. So instead of trying to do the impossible, right? If you look back over the years, how could you predict the housing bubble? When it started, you couldn't see it. How could you predict the epidemic? Like, you can't predict these type of things. So the answer is never going to be some new magic sauce, some special whatever. It's exactly what you said. It's asset allocation, regardless of what the market's going to do, because we have no control over that. We only have control over what we do. And going into it with the right allocation, you can set yourself up to not be a forced seller. And that's by having different buckets of money to do different things. And as you see, when things go bad and you're forced to sell something, that's when it's really, really painful. And there's some people out there this week that are probably going to experience that pain, and there's some that are having a great time. But it's always two-sided, and you want to make sure that you're on the side that you want to be on.
And so what happens is this. If you make money quickly, take some of that profit and use that profit to fix some of your financial problems, like paying off a credit card so you have zero debt. Make your financial life better off by the fact that you made some money on one side and use it to pay off the other. The concept of just let it all ride, the concept there is you could end up losing so much of it. We really want you to think about your long-term financial self. Imagine that your 60-year-old self is coming back to have a talk with you. And that talk is this: I want you to get out of debt now. I want you to maximize your savings, save as much as you can at a younger age so it has time to grow, time to compound, time to double and triple. Because that 60-year-old self is going to say, you know, we're going to need $2, $3, $4 million, $5 million in retirement. And there's no way we're getting there with you not saving. So no matter what age you are, save money now. Put that money away for your future. Yes, buy stocks, buy diversified stocks, build your financial security, because no one's going to be more responsible for your own finances than yourself. You need to start and make sure you're doing this in the right way, and start now.
I love how you approached it earlier, and you said if you want to trade, think of it as a business, because that's what it is. Investing and trading are not the same thing, but we want people to have multiple income sources. So if dividends could be one, another type of business, whether it's a silent partnership, an active partnership, whether it's real estate, like all these things can come together and make a really well-rounded portfolio to where you don't have to worry about all this noise. If you're retired, you should not be worried about a stock going up 1,000%. Unless one of your businesses is trading, that means nothing, because maybe you owned it, but most likely you didn't, because you shouldn't to begin with. There's no silver bullet scheme out there.
Yeah, it can be fun, though. I think fantasy football and things like that's fun. I think fantasy stock trading shouldn't be something where you put all your money there, but it can be fun. You don't know what you don't know, and that's why financial planners exist, because we know what you don't know when it comes to finance and the retirement planning. You're not supposed to know. Just like we don't know how to fix plumbing or rewire electric. Monk might know a little bit about it. I don't. I hire people. I hire experts when it comes to that. So when you call somebody else for plumbing, they need to call somebody else for financial planning. They need to call us. So when it comes to financial planning, when it comes to your financial future, you need to think about, what am I going to do? Am I going to have a coach to come alongside and help me do the best? Because we don't know what we don't know. But we know this: if you want to have a less worry in your retirement years, you need to begin now. Right now, no matter what your age is, think about your future and set that money aside so that you can have a stress-free, a retirement where you can relax and enjoy those later years. At Akers Financial Group, we want to be that advisor to help you get ready and through those retirement years. We want to provide you the information, provide you the implementation, and be there for you throughout all those years. Give us a call at Akers Financial Group at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, leave us a voicemail, and Susan will call you back on Monday to schedule a phone meeting, virtual Zoom meeting, or possibly an in-person mask-to-mask meeting. Start planning your retirement now. Call 833-946-7384 or visit us at AkersFinancialGroup.com. Thank you for listening. I'm Brian Akers from Akers Financial, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of Akers Financial Group. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated and investment advisory services through Kalos Management Incorporated. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Advice given on Winning in Retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment.
The preceding was a paid program, and the views expressed on this show do not represent the views of WJZ-FM, Entercom Communications, its sponsors, or affiliates.
Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement, Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement, Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678-356 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services.
Broadcasting from the Thompson Creek Window Company studios, the one window replacement company that does it all. This is WJZ-FM, HD1 Catonsville, Baltimore. 105.7 The Fan, a radio.com sports station.